Welcome to StockOdds Odds and Ends. We're here getting ready for the week. We're early today. It's Saturday. Good evening, Rob.
Yeah, that's great. I do appreciate when we can connect on a Saturday and get ahead of the Sunday, so people can do some research. Maybe we trigger a few ideas. Give a little bit of guidance. I hope that we have some value to offer. So, anyway, on the subject of getting ready here, so Dave Singh has a vision. See. I told you, Dave, that you wanted to get this party started, get this recording. I said, well, my wife's vacuuming, and unfortunately, my office is in the garage. We don't park cars in the garage. I've got my whole office in here, so the vacuum canister is in the garage. So garage or garage, however you want to say it. And so it's awfully noisy, and we can't obviously do a podcast. So I had to wait till she was done. I said, so he said, your wife's always vacuuming. I said, well, that's what wives do. And you said, you have a vision. So my question is it this vision? Is that the vision you have?
That's pretty much it. It's just missing the butler.
Okay, there's another man working in my garage, so that won't work. And we don't have a cat, okay? I'm not in nothing against cats, but we don't have one. So that doesn't work. So is it this vision here?
Yeah, that's pretty close.
Well, I mean, I don't have glasses, but hey, it's a little bit closer. There's no cat anyway. And then you said to me, I see a butler. So maybe it's butler brought us some strawberries and croissants, and we do have a dog which has a bit of papillon in it, so that's pretty close. But his charts are on the back side of the monitor, so I guess Dolly doesn't always get it right, does it? The Chat GPT app.
From my mind's eye straight to your screen, basically.
My wife's hair has got a little bit of blonde in it, so that's not too far off. What about this one? There's the butler bringing, but there's no vacuuming in this picture. Bringing some stuff, but that's is that it? Does that look like it? Your vision?
Pretty close.
Well, yeah, but
here's my dog. I actually have a papillon, so you stole my dog.
Oh, you had a papillon?
Yeah, exactly like that.
But here's the reality. This is it. This is how it is, Dave.
That's my world.
Anyway, Dave sent me that, so I had to put it in here. We got to have a little bit of fun, though. Trading is it's got its own challenges, its stresses, and everybody's dealing with things. And I was just, I was honestly thinking how dumb I was today. Have you ever thought you're just the dumbest person on the planet sometimes? Related to the markets and other things. But I was thinking that today. So, I guess it's related to, since November the 1st, I've really been recommending, people not to short, and I'm not an advisor, but just, hey, don't short NVIDIA and short Meta and stuff like that. There's no need to do it. We have such big AI tailwinds. So the question is, well, if you know so much and you believe so much, then why didn't I own it the whole way up? Right? Why trade it and not own it all the way up, right? So my bad. So I don't know if you guys can identify. Sometimes you just sit back and go, man, I must be the dumbest person on the planet. But anyway, so we needed a little bit of light humor here, and now we'll get into more of the meat of it. So this is the SPY Friday, the 1 minute chart here, and we can see that we had that follow through from Thursday. Really, there was some high signal pre-market, so always watch for that. And things can get priced pretty fully sometimes a pre-market. And when you see those conditions, sometimes the best thing that you can do is look at the percentage move of the SPY related to the percentage move of some of the things that impact the SPY the most and how much they might be gapping. Because when you have those bullish conditions, and there was no specific economic news on Friday morning, it was more just the follow through from the bigger event that we had the day before. And when you see that, people can often pay too much for opportunity. So I just want you to think about that for a minute. Everybody wants to have opportunity. They don't want to miss out. So sometimes pre-market, they end up paying too much for that opportunity so that the stock is gapping at a much greater percentage than even the SPY change, or, if you want to watch the NASDAQ change or whatever. And this was one of those days. So the thing is, on those types of days, it's often better to maybe short some of the risk on and buy some of the risk off, because the risk on is the one that gets priced too much. So in our subscriber list, we actually publish a neutral, which is one symbol long and short from each of the sectors. So there's 22 symbols in total. And you can balance it however you want. We just publish an even $1,000 just for reference sake, but you can allocate, you can be more long, more short, however you want to do it. But we also publish a risk on list and a risk off list. And the risk on is short the components that are generally more appetizing for risk on when people are bullish, and the longs are more defensive. And the risk off is different symbols. So it's not the opposite of the other symbols. It's not the reversing of symbols. It's actually different symbols curated for that. And it's long the defensive and short the risk on. Okay. So you have your opportunity to utilize that in any fashion that you see. But I just wanted to point that out, that we often get that the expectation so high, so rich, that it gets priced to perfection, and you have often a reversal from that, which is what we saw. So we did launch a little bit higher, but it couldn't hold. It went back through the open price and started to fall, and we actually had a gap fill. So this particular trade during the core session was very identifiable and attainable, because we went through the open price and we broke out of the opening range to the downside. And then you go, well, where does it want to go? Well, often it wants to do a gap fill. It wants to test the previous close. It did hit it, bounced quickly, but there, as it went through, you can see some stops probably were run. And that's kind of a price discovery thing. Did bounce, went kind of back, could have easily gone back to test the pre-market high, which is right in here, just failed just slightly short of that. And then closed, down towards the previous close more so. So, and then after hours was giving some back and going to test the, the pre-market or extended hours low from the day before. So this is the 15-minute chart of the week. We had a shortened week because a long weekend and so on. So we came in on Tuesday here. We opened here, kind of sold off. It was playing a bit of a wait and see game for the FOMC minutes and stuff. And then and that wasn't really a barn burner at all, not much. But it was the NVIDIA earnings after hours that launched the market. Futures, rallied. NVIDIA first, it did a quick spike, then dropped down towards the 650 number, and then it rallied 100 points from that point. So it was amazing reversal after hours, and that is what carried us through into Thursday. That follow through, and then Friday we get that premium open, right, and pull back from that point. So that's your chart for the week. And of course, as I said, NVIDIA was the big driver. Here's the daily. We like to look at that, see where we're sitting. And so in this, I mean, we're not looking at overbought conditions on the RSI at the moment. It's up there, but it could easily continue to climb the upper Bollinger Band. It doesn't have to pull back and fill the gap. We do say, looking back in history, that there are many times that gaps are filled, and especially on the dailies, but it can take time. Here's one back in here. This hasn't been filled yet. Will it ever get filled? Well, it might not. So there's no guarantee that a gap gets filled, but historically there have been. We can look at a small gap here got filled. This gap here got filled here. That gap got filled. This gap got filled. That gap got filled eventually. This gap got filled. This one here hasn't been filled. This one here hasn't been filled in this session. And these little ones have. This one here did get filled, and this one here has not. But see, it's an expectation, but there has to be other conditions and context around it. You can't just say automatically or conclusively that every gap is filled. It has a high probability, yes, both on the intraday basis, but not always, and on the daily basis, but not always. So this is the Qs. Also, just not quite as robust as you see the SPY here. So the Q is a little bit less robust. Of course, some of the tech stuff has already ran and is getting a bit long in the tooth, I guess. And it's sort of a little bit of pressure there. Profit taking probably mostly. The diamonds have done very well. Less volatility, more of a equal. It's a price weighted index rather than a market cap. So it's a little bit smoother and more boring stocks in there, of course, but it also pulled back a little bit, and it had a good penetration of the upper band on this one, but still not showing any super overbought on the RSI. Here's the IWM, which has been more of a lagger, and it did come up and fill this gap here. Both of these gaps got filled there. And still some upside potential on that if the market wants to keep going. Here's the sector performances for Friday and for the week. So industrials did really well on Friday, along with utilities and basic materials. So, a little bit more defensive, healthcare, etc. Down at the bottom, energy had been firing okay, but again, still running into some resistance up there and pulled back. Consumer cyclical, and technology had some of that profit taking in it, pulling back a little bit. With the 1 week performance, consumer defensive came out on top, actually, in spite of a rally week. So again, some reluctance to continue to pour money into only technology, maybe saying, hey, now that the news is out, this and that, we've had some amazing earnings in that space, but we've also had some disappointments. Look at Palo Alto and stuff like that. We've had some serious haircuts on some of the technology stocks. So it's not always rosy. And, the defensive has done okay for the week. Real estate down at the bottom, a little bit affected by the rising rates still. Treasuries have pulled back, rates have gone higher, and that's impacted that for sure. Here's looking at the market ETFs and the sector ETFs as well. So again, forming the worst in the sector, real estate and communications, and performing the best is basic materials and consumer defensive and healthcare. And that's for the week. You can also see how things are doing, year to date here. Utilities are now they bounce back a little bit, but still that's where some of the areas that have been shorted the most. And it's just people don't want to leave the market altogether. Sometimes they sell some of the utilities and reposition them into growth, that kind of thing. Relative volumes did decline a little bit, probably because of the shortened week. And also, Friday, this is snapshotted, but we don't have anything really jumping out at us like there's huge money flow into it. Here's the map of the market for Friday. You can see NVIDIA holding up okay on Friday, and AMD taking it on the chin. We've got ON and Empower there. We've got CLAC getting hurt. Tesla getting hurt, more of the competitive things, some recalls, stuff like that. Booking.com, we're, like we've talked about before, the travel season, we're kind of, many people have already made all their arrangements and stuff. So these things did have a run well before now, and now they're pulling back a little bit. And also earnings have impacted a lot of these bigger red ones. So, and then for the week, Adobe had a bounce back day, but really down for the week. NVIDIA up 8% overall for the week. So, and this would be look better. I mean, it had the 1 day move that was off the charts, but this would look better, except that it had been pulling back kind of with the concern of earnings, and rightly so. I mean, I don't know who sold it in the basement right after it reported, but like we kind of talked about that. And, if it gets low enough, people are going to want to buy it again. And that certainly did happen for it to rally, Wednesday after the close, 100 points off the low. I mean, that's pretty serious. It's like one of those things you go, oh man, I wish I would have bought it down there, right? So, anywho, chart of NVIDIA, there it is. And I wanted to point out something here on this chart. So, really, from the beginning of the year, it's been showing an overbought condition on the RSI. People use this too religiously in a sense that they go, well, it's overbought. And you hear even some of the talking heads, some of the main commentators on the telly, they they talk about, oh, it's overbought, it's got to come back down. Don't think like that. It's not correct thinking, because it's just telling you what condition exists. It doesn't tell you what's going to happen next. Now, StockOdds in our database tries to give you some probability based on, a look back period of over 2,000 days, what might happen next, right? So it can give you a little bit more of a data-driven influence, but you still don't have guarantees. And, it's bad enough to look at just the indicator and put all your emphasis on that. You could also put too much emphasis on the StockOdds, overbought, saying that it's due to come in. You need a balanced approach there. And especially when something's walking the upper Bollinger Band and there's very low volatility, very low cycles and swings, these conditions can persist for a long time. When you have something obviously channeling and you get like a cycle nature to it, you're probably a lot safer to take those trades. But right here at the end of October, we had a really oversold condition in the market, and NVIDIA was at the low end of its channel, and it took off from there and hasn't really looked back. So, this wasn't, at this point, this wasn't an oversold condition on NVIDIA itself, but the market in general did have that. And just be careful how much weight you put in any one indicator giving you that type of information, because I've just heard too much leaning on that, and people get run over as they, continue to short something only utilizing that. You've got to then look at the backstory, the context, and that will help you get a more balanced approach. Now, we've had a big gap here. So in this sense, could it pull back after penetrating the upper band? And the answer is yes, certainly. If people that have been holding it have seen it perform like this and it wants to start to weaken, they might be encouraged to sell it, which can create a bit of a crescendo and it can pull back. On the other hand, according to everything that's going on in the industry and there's the massive demand, the demand's there, the price is there, the margin is there, the delivery of the product might be the tough thing. So it might not get as much fundamental benefit to its balance sheet, to its earnings, to its book value, because of just the supply side of the equation. The demand side's there, but the supply side might not be. So yeah, it could run into some headwinds and suffer from that. But anyway, there's so many easier battles. You can choose other things to trade, and you don't have to get the tip of the spear. If you get involved in the tip of the spear, you can be cut. Right, Dave? Okay, Amazon.
Sure.
Amazon's being added to the Dow. And so there was some pop up on those expectations. Walgreens Boot Alliance is being booted out. And so index managers, they have to buy it and all that. So it's usually a fairly positive event, not necessarily when it's added, but prior to that. Um, so Amazon also has this gap, did get a little bit overbought, pulled back a bit, and now it's sitting, with still some room to go up, and it's currently not showing an overbought condition. So those are big drivers. Amazon's the biggest in discretionary. Tesla's next. Nvidia is the biggest in the semiconductors, and also, I mean, look at its market cap now; it's huge. So now we move into some seasonality. Dave, these are the ETFs for the last 3 trading days. So normally we talk about the last 5, okay, but the 5 started on Friday, and some people may not watch this until Monday. So I just thought, well, let's focus on the last 3, which are Tuesday, Wednesday, and Thursday. This is a leap year, so you don't get to repeat this too often, every 4 years, right? So we got 29th is on a Thursday, and then we have March the 1st. So we're going to cover the last 3 days for ETFs and for stocks, and then the last day, and then the first day of the new month, and also the first Friday. So it's a packed week for seasonality. Let's see how this thing plays out here, okay? So what do you see here on the ETFs?
Yeah.
This week?
Well, I was just first looking at the comparison of the 5-day and the last 3 days. And of the 5 days, it seems like the first 2 days are really heavy losses in general. And then the last 3 days are down, but not as much as the 5 days. So that means days number 1 and 2 of the 5 days is usually the strongest down. But then individually, it's pretty much a risk off kind of outlook for the most part, with 2/3 of the stocks more to the downside. And on the long side is the risk on stuff, ARK, KK, things like that. But on the short side, you've got some of the metals, silver, consumer discretionary,
Right.
and staples, right? So XLP, utilities, real estate. So it's like a lot of that stuff is down.
Well, and did we not see a bit of a defensive side of things, like XLP was pretty good last week, right?
The whole week, yeah.
Yeah. And earlier in the week we saw XLE rally, but then it pulled back on Friday. So, it's again the context of how well have these things done ahead of this window, which starts on Tuesday, right? So what have we seen with the ARK on the bullish side? Have we seen it perform okay? And there's a lot of bond stuff in here. You've got HYG, Junk, BND, TLT. I mean, you've got a fair amount of bond stuff in here. So take a closer look at some of these things. But let's move to the stocks here. These are the stocks. So again, consider lining that up with the ETFs if you can. We've always got a big flyer with this end phase, right? It's always one. It's either the things that people love, or they mutter about all the time. Newmont, that fits into the GLD GDX trade, gold as well. EOG fits into the energy, PBR fits into EW Zebra, right? Lowe's, discretionary, but also one of those things that kind of flips back and forth in terms of, one of those necessary things in life is Lowe's and Home Depot too. So I think to some degree, I always argue that it might be more than discretionary. Discretionary to me seems like, buying a luxury yacht or a, 200-inch TV, or what I mean?
Yeah.
I don't know. I view, and I don't even view, Tesla as that much discretionary, although, you could go with a cheaper car for sure. But I think most people think cars are pretty necessary.
But even an iPhone is not, people pretty much have to have a phone. So that's almost a staple nowadays.
Yeah, true. It is. So, but like Kimberly Clark staple, and PG is a staple and stuff like that. So, again, consider how well have these done in the week preceding this last 3 days. So is there some premium there to take advantage of? And we have found seasonality does give you a notch up on performance. It's not a home run. It's more like if you are doing stuff anyway and you're considering the value of seasonality, it does add some percentage points to your performance. I mean, that's historically provable with all the main events that we see. And usually last day of the month, first day of the new month, first Friday and expiration have more weight to them than, say, even mid-month seasonality or the last 5 days of seasonality. So just keep that in mind. So as Dave said before, the theme is still, we've got selling pressure overall as more symbols are negative by value percentage change than positive. But you also have to look at what's in the positive side. So a little bit more of the risk on the positive side and risk off on the negative side. So does that mean that these ones will go up? I want you to think a little bit differently than you might be used to. And that is, think about the relative performance between longs and shorts. If you put all of them on, what you would want is the relationship between the two of them to narrow. So let's just say you took 10 of these and 10 of these. They could all go down, but these longs would go down less than these shorts would go down. That's what you're after, the relative change between them. And that's what professionals have done for years that we work with and ourselves, is always looking at relationships, percentage change between. Let's look at the last day of February for ETFs. Again, you see ARC in there, you see semiconductors in there, you got SMH and SOXX. You've still got some bond stuff in here. Okay. And then over here, you've got UPRO, which is bullish, going down, KRE regional banks. This might be one that if I saw any contributing factors to regional banks, like any news, any concerns again coming up, the narrative being pretty bad for regionals, this would be ideal because the seasonality is there too. And don't forget what happened last March in the regionals, right? Will history repeat itself? I think we're kind of in that time of life when we see a lot of repeats. It's like history is repeating itself. It might look a little different, but it is repeating itself. We got XLF, EW Zebra again. That's the Brazilian ETF. Healthcare, GDX again. XLP again. So again, it seems to be defensive is under pressure. And so this is a weird concept to get around, though, when the entire market is kind of under a bit more pressure seasonally, but yet the riskier assets tend to be still sought after compared to the defensive stuff. That's a weird concept, don't you think, Dave?
Even the past week, we see that, right? Look at the IWM on the week, is down 2.23%. All this excitement about NVIDIA and whatnot. And small caps actually are down for the week. And even the Qs aren't up that much, up 0.5% for the week.
Yeah, and so I think this, I get, I agree with you. This is what we need to balance. This is the maturity that's needed to be able to, push ourselves back and look at the big picture and be on the right side of it as much as possible. And especially when you want to work long, short relationships, it's not a panacea for everything. And it's not a guarantee that you're going to come out smelling like a rose just because you do long, short. It's more so that you are taking advantage of a number of data sets and possibly even the news and macro and even sentiment if you can, and you're just kind of all bundling it together, right? So here's the last day of February for the stocks. So again, you see end phase on this side, trade desk, Etsy, right? So the last day still supports the risk on side. and target. So that's discretionary. So that's kind of risk on. Well, I mean, you could call that Walmart Target defensive too. Like they're both, I think Goldman Sachs, broker, financial underwriter, everything else, JP Morgan, same thing. Wells Fargo, here's those
These are
discretionary.
big, good quality financials that are weak. So
Yeah. Alcoa, Basic Materials. Yeah. So again, defensive mostly, financials, some healthcare, Gilead. Now here's the first day of March for ETFs. So this could be a great turn of the month effect. So what the turn of the month effect is that there's a lot of sort of calculations that need to be addressed concerning the end of the month. There's an argument between window dressing and profit taking, and some of the window dressing could occur, let's say, on some of the most prized stocks that people might want to show that they actually own, even though they didn't buy it. It'd be like me now. It'd be like, hey, look, I own some Nvidia. I'm not going to tell you that I didn't own it all the way up, right? It's like, see, at the end of the month, look, it's on my sheets for the end of the month. So, I mean, there can be a bit of window dressing, but there's also the reduction of net capital according to the obligations of broker dealers and institutions and stuff to meet that. So there can be a lot of pulling back at the end of the month. So it causes usually a decline in the market on the last trading day of the month, which happens about 9 out of 12 trading days in a month. And then the first trading day of the new month is up 9 of 12. So that's the turn of the month effect from one month to another. And it's because of 401k money, profit taking, reduction of calculations. It's because of redeployment of capital into the new month. Mutual funds often buy at the first day of the new month and blah, blah, blah. So it actually lasts for a few days, but we're just using the last day and the first day turn to indicate turn of the month effect. So this is showing really bullish. So this is actually the opposite of what you were just looking at for the last 3 days. And now we flip to a positive situation. So what's here? So XLE moves from this side over to this side. XOP's over here. We've got EW Zebras now on this side. KRE's now on this side. XLK's now, well, XLK was kind of a little bit on the other side too. IWM's now over here. XLF's now over here, right? Mm-hmm. And so sometimes people find some pairs that they actually can pair up from these. You can also look at your other dashboards. We have, RSI dashboards, Bollinger Band dashboards, performance dashboards. So you can all look at that and see if you can pick up any pairs. One of our subscribers, had a good Friday pairing up a whole bunch of stuff just off those dashboards. So it was really exciting to hear what he came up with. What else? Now here's the first day of March for the actual stocks. So Alcoa moves to this side, and you got a bunch there. Alcoa, Steel Dynamics, Cliff Resources, Vale, FCX, Freeport, right? Oxy, everything over here. And you still got some Apple, some tech on this side too. And then over here, you've got travel, discretionary. Trade desk is now moved to this side, from this side over to this side. Okay, so we've got and look at this, 90 on the stock side. This was on the ETFs, which also includes inverse and other things, but this is on just the stock side by itself for the first trading day of March. 92% of all the 300 stocks this is drawing from are positive by percent change. So, I mean, either it's going to be like that or it's not, guys. I mean, this is what we have to deal with, right? Okay, so go through this on your own too. Find some nuggets. Now let's look at the first Friday. It drops back for the first Friday, which doesn't always occur simultaneously with the first trading day of March, but it has occurred that way in the past somewhat. And it could be a few days apart, but in this case, it's the same day. So what do we see over here? First Fridays, again, there might be some conflict, but some similarities. So IWM still over here. So go through that and take a look. These are the ETFs. Here's the stocks. Got Avgo from Broadcom from the semiconductors, AMC. Gilead's now moved over here from on this side. We got some oil, some basic materials. And again, some of that was weaker earlier in the week. So by the end of the week, it could be a flipperoo and it could perform really well. Okay, so I'll let you guys go through that more on your own, find some opportunities. And again, the main theme, the context is where was it prior to this window? So as you get to Thursday, before Friday, could there be some overnight trades? Yes. Could there be, you buy the close on Thursday and you sell the open on Friday, or you sell at the end of the day on Friday? Yes. There could be all of that. Or you could just get ready to do the open to close on Friday, or trade the if-then statements at any point on Friday. So many different strokes for different folks, okay? Economic calendar. Dave, what do we got here this week?
Yeah, there's some themes throughout the week: housing, the economy, and some Fed speak. Those are the big ones. Monday, there's home sales, new home sales reports. Tuesday,
Now
again,
remember, hold on. It's at 10 a.m. So one of the pivotal times of day where you might see a 30-minute move in one direction and then it could reverse or continue. It's an inflection point. It's a decision-making time. Always 10 a.m. You have to have that set. As an alert, like you got to know that it's 10 a.m. Now, this new home sales may do something, it might not, but it's the time of day that's so critical. Carry on, Dave.
Yeah. So new home sales on Monday, and then on Tuesday there's this Case-Shiller home price index, and this could be important because mortgage rates are still pretty high. So that shows what the consumer is doing, and there's also consumer confidence right after that. So that gives us an idea of what the consumer is doing. And then there's some more Fed speak on Wednesday, retail numbers. But there's a good one, GDP first revision. So we'll see how the economy is holding up, that we're not running too hot, because that affects if we're going to have a rate cut. And then Thursday, again, there's a lot of stuff in here. There's PCE, there's
that's very inflationary.
Yeah. And then Friday, some more housing, there's manufacturing data, Fed speak, and consumer sentiment. So there's some retail kind of themes here, how the consumer's holding up, how the economy is holding up with GDP, and then you never know with Fed speak, they could say something out of the blue.
Yeah, well, let's just scroll back through this because it's pretty important here. Like there's 4 Fed speaks on Friday. You've got consumer sentiment final at the 10 a.m. mark, along with construction spending, okay? And ISM manufacturing. So you got like a triple threat right there. And remember, this is weird because it's in that 15-minute window after the open and then before the 10 a.m. So this is strange too, to have it stuck right there, but it can be market moving. And then we'll roll back to Thursday. Again, 4 Fed speaks right here. And at 10 a.m. again, pending home sales. And then, of course, your inflation data. So this will be important pre-market. And then we got the Chicago Business Barometer. So if you wonder why sometimes you don't get like a smooth move right from the open through to the 10 a.m., it's often because of these types of events right here at like 9:45. And then going back again, we've got the 1 Fed speak at 12 on Wednesday. So, and then the 10 a.m. consumer confidence, okay? So keep that in mind. Now let's go to earnings calendar. What do you see, Dave?
Yeah, this is a new view here, but again, there's Macy's on Tuesday. That's a big one. and Salesforce on Wednesday. So those are the Salesforce is good for technology, and then Thursday's Birkenstocks. So we're going to get some, again, retail sales thrown in there. On this view, you also have Lowe's on Tuesday. Again, like you're talking about Home Depot and Lowe's, how's the consumer spending their money on their houses, remodeling, refurbishing, or looking for new houses. And we've got AutoZone, Domino's Pizza. Again, how's the consumer spending? And there's some banks in here, and I think each day just cross-check your symbols against any earnings, so you don't have any surprises in your baskets.
And these are the Canadian banks here: BMO, Royal's buying HSBC, and then TD, and then CIBC. These are 4 Canadian banks here. Don't have as many banks in Canada as you have in the US, but that's their earnings all being reported. So there is they trade on the US side as well, so you've got overlap there between Canadian markets and US markets.
And Best Buy, TJ Maxx, again, more retail in here.
Right. So very important week. Let's just see, what did it have to say here about Macy's? They see more downside risk to Macy's earnings. Salesforce. I mean, this is a big stock. I really like this one for a trading vehicle too, because it has sometimes very nice intraday moves, and then it's got a reasonable ATR, but it just moves smoothly sometimes and rolls over and has good V or bottoms or V tops. So a nice one to trade. Anyway, I think that's it for us today. We hope that helps, guys. And thanks, Dave, for your time, and have yourself a good weekend.
Good luck.